Financial are those stocks because of regulatory concerns and what the RBI has been saying over the last couple of days, actually all of this week. You saw those stocks lose steam. IIFL Finance up 10% today. JM Financials also up about 3%. Just a couple of others on the losing side, and also because of stake sales, etc. So M&M is one that Niraj spoke about. I'll also mention NLC, where the government will sell up to 9 crore shares via an offer for sale, and 5% stake will be sold at a price of 212. So you've seen that stock come off to some extent. So, some big moves over there, Niraj, but definitely the market also readying itself ahead of a long weekend in a positive mood, I would say. Quite a recovery in the last 24 hours.
Recovery, and frankly, just the point about some of the stocks, the telltale signs were when the Inox Wind, when IIFL Finance, and when in Network 18 and others, all of which were clobbered for different reasons for the last 3 or 4 sessions, came up in trade. I think that was maybe a bit of a giveaway. Look at Inox Wind, it's up 5% today. And look at the others. So some very strong moves out there for some of the stocks. Now, let's get in a very special guest. She's made it a habit of not coming on media, and therefore on Women's Day, when we have Anu Jain, she's President of Equity Advisory, NDPMS 361 Wealth, joining us on the show in our studios. It is a special occasion. Anu, great having you. Thanks for taking the time out.
Thank you so much for having me here, both of you.
The pleasure was entirely ours. And to both you and Tamanna once again, a happy Women's Day in advance.
So Niraj has been doing this all morning, which is excellent.
Playing it safe.
We've made it a point that no one can forget that it's Women's Day. And, isi bahane, Anu Jain, great to have you here with us.
Thank you so much.
Yeah, most certainly. So, Anu, what's your sense? What does the texture of the market tell you?
Well, the texture of the market, the way we are holding on to these levels of 22,500, I think I've been seeing the FI figure for the last couple of days has also changed from a negative to a positive, and a decent number. The bank Nifty, which was kind of in comatose, has kind of now started moving. You are close to about the 52-week high. You've not yet crossed it. So I think I would keep my eyes open for 2 sectors. I like the bank Nifty formation. I like the metals formation, which you were just mentioning. Now, there's nothing fundamental on the metal side, but the formations which are there on Nalco, Tisco, SAIL, they're all looking promising, but they've not yet given a breakout. So I'd keep my eyes open for that and for banking, because while the rest of the sectors have really moved, banking has not moved. And if that was to move another couple of percent, a 3-4% move, Nifty would be close to about, 23,500. So while we are saying it's expensive, while we are saying mid-caps look steep, I think there is still legs for this rally. And given that you're about a month away from election and it's a more or less given result, even the FIs which have refrained from entering the market would probably now say that we know that the result's going to be this. Let's kind of start making our inroads into the market, maybe large capish. So Nifty still has legs.
Yeah. And it's interesting that this is happening because on the banks piece, the thing that we mentioned yesterday about why whenever the bank Nifty's valuations have been below 2%, there has been buying, I mean, it would have given you benefits, is turned out to be true. Anu, banks, I mean, large private banks or others as well?
I think, the PSU small caps have done their bit, and I think that's moved a lot. I'm not saying they will not, but I think the catch-up trade is now in the private banks. And you've seen ICICI do it smartly. I think it moved about 10% last month. Axis hadn't fallen much, but I think Axis, SBI, so it's agnostic to public and private. I think even an HDFC giving another 5-6% is very much on the card. Plus, HDFC will get some FTSE allocation also later, in this month. So all these things can prop it up definitely by about 2 to 3%.
Yeah. I know, Anu, that you will not want to talk about any specific companies in terms of what's happening, and I want to ask you to talk obviously about an IIFL or a JM Financials or a Paytm. But I just want to understand what the view is within the capital markets on this space from the perspective of, is regulatory action really being seen as such an overhang, or was that a bit of a blip? Because you've seen a fantastic recovery today. The sense now coming in that companies are quick to respond, and that overall financials as a space is a strong bet for investors.
So that's one pocket which is still cheap, because we saw that starting with Bajaj Finance in November, where it, from about 8,000, it is today at about 6,200. You've seen that follow through with every one of them. Now, actually, the litmus test would be, I think Bajaj has called for an analyst meet on 12th or 13th. I'm not very sure whether it's 12th or 13th. My assumption is that they're going to come. It's been a quarter that we are ready with the changes. I would really watch, because yesterday the RBI governor came and said we are not out to control growth. We are not out to get people. So how the first correction is, the remedial measures are taken by the RBI and what kind of action they take would actually be a test. So suppose on 12th or 13th, Bajaj Finance comes and says, okay, I've sorted this out. And then I would look at how long does RBI take to revert back on that. And what kind of action happens then. And if that happens quickly, believe me, the others will follow suit. So I think that would be the first mover thing that you should keep an eye on around that time. And that would honestly make a difference to the entire sector. I would keep my eyes open for that.
And that's a very interesting insight. And, at the end of it, on the other end of this entire story, in terms of what the regulators are trying to do, is, this concern about retail investors, froth and small and mid-cap companies, huge valuations going up, and sort of breaking a cycle of more investments flowing in and hence more money coming in. Do you think that is also sort of overplayed, because real value can be built into this, or are you also circumspect about some of these small cap counters?
Well, honestly, I was reading, something which Mr. Uday Kotak said at the same days when all this happened, and he was saying that regulation is always good. But the fact is, you can't go on I wouldn't say it was a witch hunt, but people felt it was a witch hunt.
Exactly.
And that always will put the investor on the back foot, money won't flow, all those things will happen. So I think everything which is taken by, and I think we are the best regulated on the financial sector, because our RBI is someone who has been very woke about the whole thing, and so I think it's not bad, but only it has to be done in a way that the regulation comes before a person kind of is reprimanded for it. So I think regulation change, regulation tightening is always good for the small investor, and that's going to be good. It's just that there is more clarity, there is a time frame in which the remedies are taken care of. So I think over a longer period of time, this will be looked back as a period which worked for the industry rather than didn't work for the industry.
Long term, absolutely. But just on the specific point of valuations of small cap and mid cap stocks and the run up that they've seen.
So that does
some of it make you uncomfortable?
Yes, obviously. I mean, we have started moving our flows where we invest into the mid caps to the large caps.
Oh.
We have done that. But if you look, we've been saying that for 6 months, and 6 months mid-caps have still been doing very well. So you can't say that where is enough. Yeah. But just like you get a SIP into a sector, you can do an SIP out of the sector also. So you can do it slowly.
That's true. Anu, some pockets which are taking a bit of a breather currently. I'm just trying to, because you look at long-term trends as well. So for example, defense. A sector of the year for 2023 maybe. You could argue even PSU banks could be there, but defense, let's say. And currently undergoing a kind of a sideways move for the last quarter or thereabouts. What happens in spaces like this? When do you see the trend changing, if it does, or if at all?
So, you'll see that not everyone is. So BEL is on a complete breakout.
Sure.
Okay, so things which hadn't moved, people are just saying, okay, I like the sector, I just think the others are expensive, so let me kind of reroute the whole thing. Right. So that's happening. So overall the sector for a 5-year point of view, I think is extremely good. It's just that this has been a very momentum driven market, so I think momentum has found better pockets to move on to, and I think it will be a matter of time before they come out. Wherever there are good orders coming, wherever there is, we saw that with Data Pattern about 2 weeks back, right? So it just blasted out. So I think this is a process where consolidation will happen and then the next move will happen. And I think it's here for a time being, and if you, as I just said, if you look at BL, that's on a move despite the sector being on a consolidation. So it's just, I would say it's like a step formation, which consolidates and moves up.
Okay, but I would take it from whatever little we've spoken thus far, and we'd love to talk to you about autos, because the stock of the day that we've chosen is also an auto name, and we'll just get that going. But I would reckon that you believe banks are the ones which people should keep a keen eye out for.
See, the fact remains that if I'm looking for value right now, okay,
very little places.
There's very little places. I mean, even autos are fully valued. So if I have to deploy money, where do I deploy money right now? Or if today, as I'm saying, the FIs are probably going to come back in a bigger way, where the hell are they going to put that money? You know, they want where they are sure that over the next 1 year at least, they're carrying back something home. So I think that's the place, and given that we are the most well-regulated financial sector in the world, I think that's the first place where money will come in.
Okay. Well, autos, and let's talk about that for a bit.
Stock of the day is M&M. Now, the shares have, of course, slipped, but that's because promoter Prudential Management and Services is selling about 93 lakh shares. So not really a fundamental hit, but a large trade. Smriti joins us with more details.
Hi, yes, Mahindra and Mahindra's promoter, which is Prudential Management and Services, is today going to sell about 0.75% of stake today in the market. That's about 93 lakh shares, and from the price will be from up to 3% from yesterday's closing. So on an upper end, the deal is about over 1,800 crore rupees. Now, Prudential held 11.6% stake as on December 2023, but it came out with a statement last night as well, Mahindra and Mahindra, on the exchanges, where it said that shares of Prudential held by the former chairperson Keshav Mahindra, who passed away last year, were given to his family, and they have liquidated a proportion of this stake to meet their needs, and they promised that they will continue to retain the status of promoter in the group company, and there is no intention to sell further stake in the company in the foreseeable future. So that's the statement from the promoter group as well, that they're gonna continue to retain the promoter position and won't sell stake. Now, all the details about the price and the stake, NDTV Profit saw the term sheet last night and were put out, and that's why we're seeing a sharp reaction in the market today as well on this.
Thank you for that, Smriti, there with all of the details. Now, Anu, you spoke about how autos are quite well valued, but I want to talk to you about a Tata Motors right now, because what's happening with the entire Tata group, the Tata Sons sort of excitement, the demerger news, and also from the angle of, are you now looking at which of these companies are best placed in terms of the EV switch or the EV wave? And does Tata Motors hence stand out for you, or is there a different view?
Yes, I mean, absolutely. There is no one else in the, passenger car. There's nobody else which is meeting the middle class EV background compared to them. However, I think at the current price, it's almost fully valued. So it may go on a sideways spree after some time, probably after the Tata Sons IPO probably. But for now, yes, it's good to hold. It's good to hold for 5-year portfolios. But if it's a trading portfolio, I would probably book profits. But yeah, you have this whole party going on, so you ride the party.
Are you dancing close to the exit gate right now, or no? Not really.
I think I am close to it, but I generally run the long-term portfolio, so there it doesn't make a difference. But for people who have a shorter bend of time, I think it's time.
How closely are you looking at election dates, post-election, and what happens then? Is the next 3 or 4 months a sort of a wait and watch? I continue to be positive on the market, unlike a lot of people who suspect that this is fully valued. I don't think we are yet fully, we've not discounted the next 5 years. So you are in a phase where everything's being discounted for 3 years. And given that, we've generally peaked out much ahead in terms of multiples as to where we are trading now, I think there is a potential that you could still do, if not 10%, at least 5 to 6% more before you go into a pause or correction. And the fact is, everybody is saying it's expensive,
that itself is a fact that this is very different from previous time where everybody was in the same basket that let's chase stocks. So there is a differentiation, and I would give a lot of credit to all the channels because they have been putting valuations out for people much last 6 months that this is expensive. So people have started. It's difficult, in fact, nowadays to tell people to buy stocks because clients say it's expensive.
So we're informing them as we should.
Yes.
Anu Jain, thank you so much for coming in. And I know you told us about how NDTV Profit is special for you. So we're happy that you came in.
Thank you so much. It was the first channel I ever came to. So yes, thank you so much.
And let's not wait for a Women's Day to have you back in.
Anytime.
Can we get you to promise to come back very, very soon?
Sure, absolutely.
Fantastic. Anu Jain there are talking about markets and more. We'll take a very quick break, but we're coming back with the key volume buzzers at this hour and a lot more on what's happening in the markets. welcome back. You're watching India Market Close, and the markets are, let's not look at what's happening to the Nifty and Sensex because very, very flat. The story today is in the broader market. So you need to look at what's happening with your mid-cap index, with your small-cap index, and the kind of recovery that we have seen through the day. Mid-cap 100, off that highest peak, but the small-cap 250 almost 1% up. And it's being led by, of course, the Tata Group stocks, like we said, but also an IFL, a JM Financial, and sort of change in mood with the kind of stress that we saw over the last few days. I'm going now to Shibani Sarkar-Kurian of Kotak Mahindra AMC for her take on the markets and what's next. Shibani, thank you so much for speaking with us on NDTV Profit, especially on the day when we are celebrating Women's Day. So we're, doubly glad to have you on. I just wanted to start by getting your take on what's happened in the last 24 hours. Have those concerns of a quote-unquote, very carefully in quotation marks, witch hunt by the regulator now eased? Or is there a realization that there may have been an overreaction?
Hi, a pleasure to be here, and a happy Women's Day, a day in advance to all your viewers as well. So when you look at the markets and, especially in concern to your question on what was happening on the NBFC side and some of the regulatory steps that have been taken, clearly, what the regulator seems to be stating is that wherever there have been shortcomings in terms of following the regulatory norms, the regulator has stepped in. However, the regulator has also, in many cases, as has been discussed on public forum, given adequate and ample time for these entities to make the corrective action. So the way we look at the entire NBFC space is, one, NBFCs do play an important role in terms of credit growth and also dissemination of credit to the broader country and reaching out to customers where possibly banks don't reach out to. Having said that, when you look at NBFCs today and you look at it from a more fundamental perspective, you have to realize that NBFCs have also gone through fair amount of turbulence, specifically with tight liquidity and margin pressure. Incrementally, the way we have focused on NBFCs is a few key factors. One is look at NBFCs which have dominance or have market share in their segment in which they are operating in, preference for the secured segments over the unsecured segments, NBFCs which have strong parentage, and more importantly, NBFCs which have adequate liquidity as well as capital. And therefore, while we do believe that NBFCs, especially if interest rates do come off in the second half of the year, will have better margin trajectory, one needs to be slightly more choosy in terms of the kind of NBFCs that you own in your portfolio. And even within the entire finance basket, these are some of the key factors that we are looking at while picking and choosing plays in this segment.
Shibani, loved your note. Thanks for joining in. Happy Women's Day to you. Just a quick thought about whether you are skeptical, overly skeptical of the broader end of the spectrum, or are you comfortable adding in strong growth stories even if the market capitalizations are a lot lower than what would fit an average mid-cap?
No, so hi Niraj, again pleasure to be on your show. So I think what we have been typically saying is that if you look at the last 2 years, earnings trajectory clearly has improved significantly, both for large caps, but more so for mid and small caps. However, the re-rating that you have seen, specifically where small caps are concerned, has been extremely sharp. So today, if you look at vis-a-vis its own history, large caps are trading at about a 6% premium. Mid caps would be trading at about 20 to 22% premium to their history, while small caps are trading at almost a 40-45% premium to their own historic average multiples. And therefore, while we do expect that going forward over the next 2 years, mid and small cap earnings growth is likely to remain stronger than large caps, valuation specifically at small caps also leave less room for comfort. And hence, we have been advising that you start tilting portfolio slightly more towards large cap, where earnings growth still remains fairly strong in mid to high teens, but valuations are clearly in your favor. So that's the stance that we have been taking. And we believe that from a risk reward perspective, in the near term, large caps are possibly better placed.
Yeah. And Shibani, if Chak De was the favorite movie, what would be the favorite cast out of this ensemble of large cap spaces, if you had to choose one favorite player, would it be banking? Would it be energy, which has lost its weightage over the last 15, 20 years? Or would it be something else?
So I think you asked the right question. So if you look at today, the cast specifically within large caps, where on one hand you do have valuation comfort, and you also see a fairly strong earnings as well as return ratio trajectory over the next couple of years. I think banking, specifically the larger private sector banks, which seem to have underperformed the markets in a big way, do stand out in that context. Now, I agree that there are concerns today on margins. There are concerns today on loan growth coming off, given the fact that CD ratios or credit deposit ratios are elevated. However, if you look at over slightly longer term, we do continue to believe that the banking space, specifically the larger private banks, will continue to gain market share on loans and deposits. They are better placed on technology, and capital seems to be fairly comfortable. And margins, while there is a hiccup on margins, but if you look at margins vis-a-vis, where the cycle started, margins are still higher. And therefore, the entire return ratio profile change over the last few years has not been reflected in valuations. And therefore, risk reward again in this segment continues to be favorable. And I think if you have a slightly longer term view, may not be the next few months, this is an interesting space to watch out for.
Okay. Shivani, great having you. Thanks for taking the time out. Lovely note that you wrote yesterday. And to you and your team at Kotak MF and family, happy Women's Day.
Thank you so much, and great talking to you. Thank you so much, and happy Women's Day to all your viewers once again.
Yeah.
I'm realizing, Niraj, that because we've been focusing on Women's Day and getting all of these fantastic speakers on, we've got such a superb variety of experts today.
Yep. And there is one more coming up.
And there's one more coming up. Shivangi Sarda, Analyst Equity Derivatives and Technical at MOFSL, with us now on the show. Shivangi, great to have you on. Thank you so much for joining us today. Let's just start by getting your take on what we're seeing in the markets in terms of the Nifty and the Bank Nifty to start with, and then of course we'll move to the broader markets.
Thank you, Niraj and Tamanna, for having me on the show. So we have seen that the markets are cheering at lifetime high zones, and there has been a very strong comeback of the bulls with support-based buying, especially in the Bank Nifty. Talking about the broader market, the India VIX, the volatility index, has cooled off and has been cooling off from the last 1 week, which indicates that the bulls have a comfortable position in the market. Now, talking about the levels per se for Nifty, we are, standing now above 22,500 zones very comfortably. And we are heading towards 22,750 for the next levels to watch out for, with a crucial support of 22,350 zones. So this would be the take on the index, with buying to be done at any small declines. Now, talking about Bank Nifty, in the last 3 sessions, we have seen that over 85% longs have been added in the index, and the PSU banks are now supporting the entire pack right now. After a slack of the last few series, now finally Bank Nifty is outperforming, and we are seeing that it is heading towards its recent lifetime high zones as well. So overall buy on declines on the Bank Nifty as well. The chart structure looks quite positive and promising from here onwards, and we are looking at 48,250 and then the lifetime high zones for the Bank Nifty with a support of 47,500 zones.
All right. Shivangi, we'll take a very short break. Please stay on with us as our coverage continues. On the other side, we'll get top picks from Shivangi, all of our other guests as well, as we look at what's happening with the markets. A muted kind of a day ahead of a long weekend. Definitely the story in the broader markets. What should you pick at a time like this? All of that on the other side. seconds to go. It's fantastic. We're on top of the world. We're leading the change, and we have the support of all our colleagues.
Talented,
supportive,
happy. They empower men and women combined in the newsroom.
They are driving it, not just changing it.
Smart,
fun yet intellectual,
radiating confidence,
vibrant, effervescent, and stunningly intelligent.
Innovative, hardworking,
multitasking, versatile, enigmatic, and very cheerful.
Tenacious, humble, and wanting to get to the depth.
They are much more talented. They are much more creative and innovative. And they are bringing a sanity in overall discourse that we are currently creating and consuming.
Well, it is certainly true. All of that and more. And we are in conversation with Shivangi Sarda. She's Equity Derivatives and Technical Analyst at MOFSL. In a bit, we'll be joined by Mayuresh Joshi as well. Shivangi, to you, happy Women's Day to you and everybody at Team Motilal Oswal. And I would love to understand, you sounded constructive on banks when you gave off your first response. Is that the only bucket that looks strong, or do you believe something else could lead the markets higher as well?
Well, thank you for the wishes, and wishing, your team and all our women viewers a very happy Women's Day. And of course, it's not just today, but every day that we should celebrate ourselves. Of course, banking index is quite strong, and we are looking at PSU banks specifically over here, which is looking quite strong at these levels as well. Now, apart from this, auto space is looking quite attractive. Some of the stocks like Bajaj Auto, TVS Motor is, on the radar. And we've seen that Bajaj Auto has been consistently moving upwards and onwards from the last round about 12 months now. And it has been a outperformer from the last 2 years after a long consolidation. So definitely this stock is one stock on the radar. And we are, for the targets, if we talk about, then we are looking at 92.50 levels over here with a stop near 87.10. Now, the next pick on my radar is HAL. This stock has given a price volume breakout and is holding on to its exponential average quite, resiliently. And we've seen that weekly basis, it has given a breakout from its pole and flag pattern formation. And RSI is also turning positive for the stock, which is, adding to the next upward target, which is around about 34.50 odd levels, and 32.50 would be a support to watch out for.
I just want to pull up UCO Bank for a second and those flashes on your screen. Remember the IMPS scam where about 800 odd crores went into random bank accounts? So there is a CBI case that has been registered and searches are going on right now. So you've seen a bit of a dip in UCO Bank and then a recovery as well. Let's refresh those rates and look at what's happening with UCO Bank. Mayuresh Joshi also with us. He is Head of Research, MarketSmith India. Mayuresh, welcome to NDTV Profit and this Women's Day party we're having here, but everyone's invited. So great to have you on as well. Tell us about what you think in terms of the recovery we've seen in the broader markets today. After 2 days, I would say about 48 hours of uncertainty, a bit of nervousness, regulatory action, etc. Is this now short covering, or are you seeing a realization coming in that perhaps it isn't that harsh?
Afternoon, Tamanna. Afternoon, Niraj. Wishing you, the entire team at NDTV, all viewers and women all across the world, a very happy Women's Day. You guys literally rock. Coming back to the markets, I think the entire perspective about the broader markets having run up a little bit too much, that probably leaves very little room in terms of any error or omissions that the broader market stocks can deliver. So if there is any miss in terms of any earnings estimates going forward, I think the correction can be equally brutal and sharp. And therefore, I think the entire perspective in terms of the risk reward probably staying with the large caps at this juncture, as we are hitting all-time highs almost every day, probably looks to be a better scenario. Looking at various optionalities in terms of the earnings trajectory, the expectations of macro and micro developments, where key pivot levels lie as per Markets with India, and where the overall valuations probably are positioned as well. I think large caps at the current juncture probably offer a better risk reward in our opinion. And therefore, I think selectively within the mid-cap universe, one can probably look at spaces like road companies as an example on your watch list within the entire cap code manufacturing infra theme, hospital ancillary stocks as an example, or even auto ancillaries very, very selectively. I think that is where our expectation is that the EPS growth might continue over the next few quarters. Financials generally have held up pretty well, specifically the large cap names at this juncture. And obviously the premise and the underlying pinnings that probably happen for this sector with the expectations of a rate cut at some time in the second half, a strong recovery that can come through, both in terms of advances, deposit growth, and therefore maintenance of NIMs coming back to normalization levels and earnings trajectory improving in FY25 is probably keeping the large cap financials in better stead compared to the smaller names at this juncture. So a little bit skewed towards large caps, Tamanna, to answer your question, and very, very selective on the product.
So which are those selective large caps? I'm going to come back and ask Mayuresh about it. But meanwhile, we have to talk a bit about, I would say, one section of stocks that are really in focus. That's the Tata Group companies. Why is that happening? Well, the short answer to that is because there's so much of a buzz about a Tata Sons IPO coming up and investors possibly trying to look at the best options to ride that wave. For the longer answer, let's go across to Harsh Saita, who's standing by. Harsh, so two questions in a sense. One, what's happening in Tata Group stocks? And second, why is Tata Chemicals seeing the most action?
Well, thanks for that, Tamanna. First, let me take it to Tata Sons itself and the basis of what's causing this buzz. It's largely because of a possible listing on Tata Sons. Let's first look at the valuation. Let's look at the numbers first. Tata Sons, roughly the valuation is pegged at 8 lakh crore. It's got 16 lakh crore worth of listed stocks in its portfolio, in its book, of which Spark Capital, which has actually sparked this this question of whether Tata Sons will list or not, pegs a 60% discount to that value as the holding company discount. After adding unlisted assets as well as adjusting for liabilities, 8 lakh crore is the market cap for Tata Sons, is what they peg it at. Could be more. Now, in terms of which companies own a stake of Tata Sons, well, you have Tata Chemicals, which owns roughly 20,000 crore worth of stock at 8 lakh crore valuation. Tata Power, Tata Motors, and Indian Hotels. Why does Tata Chemicals become important? Because look at the value of Tata Sons versus the value in terms of current market cap. The maximum value that in terms of market cap that's been extracted from Tata Sons, 59% of the market cap comes for Tata Chemicals, and that's why Tata Chemicals is the one which is in focus. If you ever want to play Tata Sons, that is why this is the best play. Now let's try and break down Tata Chemicals a little more, try and understand the nuances around valuations of Tata Chemicals itself. The core business of Tata Chemicals is valued at roughly 20,000 crore as per Motilal Oswal in its February post Q3 numbers, post earnings. Where does the value come from? Is all the way from here. Now first, soda ash and their foreign business itself is around 19,000 odd crore. If I net off the cash versus the debt, you're left with roughly 20,000 crore. Now I'm going to try and understand the value of the Tata Sons business as well as other businesses which Tata Chemicals holds. Because Tata Chemicals does not just hold Tata Sons. The market cap of Tata Chemicals is 34,000 crore. But let's try and pull up the numbers with regard to what other companies Tata Chemicals holds. So Tata Sons, of course, 20,000 crore, we spoke of that. But Titan, it owns roughly 5,300 crore worth of Titan, around 700 crore of Indian Hotels at current market price, and around 500 crore of Tata Steel as well. So these are some of the other names that Tata Chemicals owns. But outside of that, it also owns Tata Investments, Tata Motors, and Oriental Hotels. These are the valuations for that. Cumulatively, it owns roughly in its non-core portfolio, listed stocks were 27,000 crore. Outside of this, it owns Tata, including this, it owns Tata Sons as well, and at a 20% discount, this value, which is the general holdco discount, which most analysts are applying, you have a value in terms of market cap of 22,000 crore. If I add the value of the core business, it comes to a market cap of 42,500 crore compared to the current market cap of 34,000 crore. So that's the broad breakup of why Tata stocks are in focus, one, and Tata Chemicals in particular.
Thanks, Harsh. That's well, that's in depth, all right. So while the street, and rightly so, believed that the Tata Sons upcoming IPO is the reason, you know, when you kind of scratch the surface a bit, you realize the quantum of other investments that are there in Tata Chemicals as well. The problem, of course, is that soda ash prices have been falling in the international markets due to weak demand in the recent days. Could that act as a party pooper? That's the question. Now, Mayuresh, a fundamental question to you, and then Shivangi, before we thank you, a word on this and some ideas too. But Mayuresh, to you first, this tug of war between falling international prices versus this value that Tata Chemicals carries in its plate of other investments, what weighs higher?
At the juncture, I think value of other investments is weighing higher, Niraj. But I think the market will at some point revert to how the core business is expected to function, because that's the base case in terms of how the functionality will probably ensure earnings growth will happen. And you're absolutely right. If you probably look at the latest quarter, soda ash, both pricing as well as volumes were significantly lower because of lower demand across geographies. So except the Kenyan market, I think the US market, the UK market, and even the Indian market has suffered both in terms of price erosion as well as volumes. Again, there was a plant shutdown, a planned one in the North American markets. But even to a large extent, I think the recovery probably seems only after a few quarters. The sodium bicarbonate business also is struggling. I think the volumes were a little bit better quarter on quarter. But again, pricing is becoming a big issue here, as well as the salt business for Tata Chemicals. So to that extent, the kind of capex plans that Tata Chemicals has lined up, they've got 500 crores to probably go through for the remainder of this year. And again, a huge capex of almost 2,700 crores spread over the next 3 years, where they're expanding capacities quite significantly, both in terms of soda ash, sodium bicarbonate, and they're doing the silica business almost 5 times where it is at this juncture. So to that extent, I think the net debt at a net level has gone up to almost 4,400 crores. And the core business is still expected to take a while before it recovers and start showing some element of earnings respite. So I think at this juncture, Niraj, it's all about Tata Sons, the investments in other assets. But the core business is clearly struggling as we speak.
So, I mean, soda ash prices, I think, is nobody's concern. It's just a whole different kind of a situation going on there as far as Tata Chemicals is concerned, one supposes. But Shivangi, I wanted to know your take on Tata Chemicals right now, or any of the Tata stocks if you're tracking them.
So we've seen that there has been quite a lot of surge in the last 2 sessions in Tata Chemicals, round about 35% price and open interest addition over here. So of course the stock has seen a long consolidation, but there has been a good run up over here as well. The entire space is in a lot of a buzz and action. But talking about the other Tata stocks, we are also looking at Tata Consumer, which is looking quite attractive at these levels. And this stock is more stable comparatively and has been holding on to its support zones. Also, we've seen that the stock has given a weekly breakout, which is indicating that it is quite sustainable at these levels as well. Now, the entire consumption space is also picking up momentum, and we are expecting this stock to move around 13-15 zones, and 1240 would be a crucial support to watch out.
Shivangi, I must ask you for your picks before I let you go. We're just about 10 minutes from market close. Anything that you would see as not a BTST, but maybe buy today, sell Monday play?
So we've talked about Bajaj Auto and HAL. These two picks are on radar for BTST trades. Looks quite positive, and the kind of price volume surge that we've seen in the last half of the session is quite remarkable for these stocks. Now, one more stock which I am looking at is SBI. Recently, we've seen that there has been a good price run up over here. It retraced to its 23.6% retracement of the recent swing. So stock has taken a good support and now heading on to a good levels. So this is one stock on radar, and we are expecting 820 levels over here with a support of 770.
Okay, Shivangi, we'll let you go on that note. Thanks so much for taking the time out and have a great weekend. All right, that's the view from Shivangi Sarda, and watch out for some of those ideas. Mayuresh, today a bit of a U-turn in some of the stocks which were getting badgered the last few days. I think we spoke to Suzlon, and JP Chatsani kind of, at least in his comments, led us to believe that for the next 3-4 years, this change of bidding mechanism, even if it happens, doesn't impact a company one bit, because a quantum of orders already given out are to the tune of 27 gigawatts. I mean, who will execute these? So in some sense, the change that we're seeing in a Suzlon and Inox Wind, etc., does it inspire confidence, or would you want to wait on the sidelines for the time being?
No, so I'll wait out for Q4 numbers, because the large part of the move, Niraj, has taken place. And you're absolutely right. I think the quantum of orders that have probably come through, the kind of fixed asset turnover that one expects from these companies, at least in the near foreseeable future. So if you start discounting the next 2 years in terms of revenues, working at 100% capacity, I think the orders are going to suffice at the margins at which these orders have been given out. So to that extent, I think even if you roll over FY25 numbers, they are still going to look very, very strong year on year over the next couple of years. And therefore, I think the kind of earnings stability that one expects to come through will sustain for that periodicity of time. What happens thereafter is something to be seen because of the new mechanism which has probably come in. There might be some curtailment or some clawback in terms of earnings estimates if you start rolling over post 2 years as well. But I think over the next 2 years at least, numbers are safeguarded for this place.
Just another sector that has completely been sparkling today, Mayuresh, in last few sessions actually, is the metals pack. Even today, from a JSW Steel to, of course, a Tata Steel, a Hindalco, all of them showing quite a good, boost up. What do you think the reasons are fundamentally, and can this sustain?
So I think two aspects, Tamanna. I think what the market probably believes is some element of a huge stimulus at some point, which everybody's expecting to come through from China, and some recovery happening as far as the Chinese real estate market is concerned by the end of this fiscal. So as the rate cut scenario starts coming through for most global markets in the second half of this calendar year, there is expectations in terms of some support mechanism that the Chinese real estate market will get. Now, if that probably happens, and a combination of both these factors, with the kind of inventory levels that are across the metal chain, whether you talk about ferrous or non-ferrous, they're absolutely at low levels as we speak. So as demand starts clawing back very, very steadily as far as China is concerned and the rest of the globe as well, the metal prices on LME will start moving northwards. And as that starts happening with restocking taking place, the moment can be even sharp. Now that reflects directly in terms of how the realization aspect is played out for Indian companies as well. So higher LME prices, stable volumes, at least in the domestic context, stable input costs will mean that a huge element of operating leverage starts getting played through for most metal companies in this context. And therefore, the earnings scenario will start looking better over the next year as well. So to that extent, I think there are these tailwinds that the market is probably working on. How does that translate into numbers? I think Q4 will be a totally different story.
All right. Thank you so much, Mayuresh, for joining us as we wrap up this week. I would just say not too bad, all things considered. You've had sort of a lot of news flow, market spook to some extent, but once again, the underlying resilience being seen. You've touched 22,500 levels there. Doesn't look like we're going to end there, though. A bit of weakness coming in. The recovery in the broader markets, though, is the real story. And, of course, what's happening with Tata Group stocks. The recovery in GM Financials and IFL Pack also showing that kind of a story turnaround, where the fears of too much regulatory action seem to be receding, at least for now. Thank you so much, Mayuresh, for joining us. So we've had quite a day through the market hours on NDTV Profit, celebrating women entrepreneurs, and not just piecemeal or not just, to talk about on one day. We've spoken to all of these wonderful experts and entrepreneurs, not just about being women in their chosen field, but also about their businesses. Listen in to what some of them said.
We started the year by being present in 350 or 375 towns and cities all across the country. And we're going to end the year by being present close to 600 towns and cities all across the country, right? So distribution in terms of access, providing access to people who can access our specialized tests and our normal tests, and providing that entire 4,000 varieties of test menu to every small part of India is definitely going to be a critical part of the strategy. So geographical expansion will certainly be a key part, but along with that, product mix, as we keep moving people to better, more advanced, specialized tests as well, when it's required by them from their healthcare perspective. I think both of these will play an important role in our strategy.
Even though sugar is trading at like 46 rupees ex mil for export, we would rather still have the ability to make ethanol rather than export sugar at this moment, because the government is very, very balanced when they come to that approach. So let's come back to the point. The reason that all of this regulation came in was because of the El Nino effect, which they thought would last for 2 years. Now already the El Nino effect is weakening. As you know, it's kind of raining all across the north of the country, a little bit also maybe in Maharashtra, Karnataka side, which in El Nino it does not happen. So El Nino is already weakening. La Nina is supposed to set in June, July at the latest. If this is happening, which is quite certain, I would say, in this case, the crop production will again be up and everything will be back on track. We will have enough sugar for domestic consumption. We will have enough sugarcane for ethanol blending, and we might even still have something left over to export.
So today I can say, and the blue collar, we have around 30% women. And that's been something really inspiring. And we want to have at least 45% women as we go forward. And my key, thing, if I say, and when I hang my boots, I would say that, if I've done my work well, is where, it becomes an equal wealth spun in all ways, diverse wealth spun in all ways. So I think that's what is very, very important to me. So whether it's in the blue collar associates or working at the factory level or at the white collar or even the leadership, I think is where I really feel we can have more women.
There's a bit of a buzz in the NDTV Profit newsroom, I must say, as the markets are shutting shop. Where the markets are flat, as flat can be, the newsroom is not. Just a quick mention of the heat map and show you while it's ending flat, a number of stocks which have made some serious moves. So at the end, at the losing side, you have Mahindra and Mahindra, of course. And then, Tamanna, because of a change in GRMs.
Yes.
I think RIL and BPCL.
So the Singapore GRMs have come down. Crude prices are slated to go up. That's impacting here. The story really on the top. Tata all the way. Tata Consumer jumped up now. Tata Steel, Tata Motors again up about 2%. TCS as well. In fact, if you look at the entire Tata pack, and the buzz is because of Tata Sons IPO coming up, you've seen that completely shine. We should just pull up Tata Chemicals also while we are at it. Tata Chemicals, Tata Tele, all of them, Rallis, all of them have had a great day. The other spectacular story of the day, Niraj, I would suppose is IIFL and JM Financial.
And Inox Wind and Network 18.
Completely. Everything that was down is back up. And, that's telling you that the market beyond a point is buying on dips and completely. Even a JM Financial, is not like the regulatory overhang is over for any of these companies. What was true 2 days ago is even true now. But yet you're seeing the turnaround. I just want to see how Mahanagar Gas closed while we're at it, because there was again a concern about prices being stifled because of policy decision. It recovered a bit, but it's not done too badly. Closed about 1.5% down. But the focus today, since we're celebrating Women's Day on NDTV Profit.
You want to come this side? Let me stand there and wish everybody. You want to do that?
I think we can all wish. Come on, guys. We want to focus and show the women power in the NDTV newsroom. Some of them are familiar faces that you see on screen every day. Some of them are those who work behind the screen to really, power the product that you see. So here, at least at NDTV Profit, the fact that we have women representation is not piecemeal. Don't feel
so before I get out of the screen, I get out of the screen, to all you wonderful women.
Come ahead. So our producers are here, our reporters are here, the people who work in the PCR, in the graphics team, on the back end, all of them here. And all of us all together, Niraj, you can come and stand with us. No problem. Wishing.
I'm a very minor minority today, so I'll get out of the screen and let the women grab the screen as they should. But to all of you, thank you so much, and a very happy Women's Day.
Very happy Women's Day from all of us. Thank you so much for watching. Happy Women's Day.
seconds to go. It's fantastic. We're on top of the world. We're leading the change, and we have the support of all our colleagues.
Talented, supportive, happy. They empower men and women combined in the newsroom.
They are driving it, not just changing it.
Smart, fun, yet intellectual.
Radiating confidence.
Vibrant, effervescent, and stunningly intelligent.
Innovative, hardworking.
Multitasking, versatile, enigmatic, and very cheerful.
Tenacious, humble, and wanting to get to the depth.
They are much more talented. They are much more creative and innovative. And they are bringing a sanity in overall discourse that we are currently creating and consuming.
Hello and welcome back to NDTV Profit, where we bring you a Women's Day special. I'm your host Mihika, and with me is Mahima. So now, internationally, Women's Day continues to serve as a forum to bring attention to the larger discourse of inclusivity, gender parity, and rights talk. On the occasion of Women's Day, we bring you the stories of women from different walks of life. Stories of dedication, perseverance, commitment, all this while breaking barriers. Take financial independence, for example. Women are just not concentrated to fixed deposits and gold. They are diversifying, and how. We got to speak to a group of retail investors on how they manage their investments. Let's take a look.
It's always said, no, that do not put all your eggs in one basket. You should always diversify. So what is your strategy when it comes to investing in stocks and mutual fund, and how do you diversify your portfolio?
So honestly, I've been fortunate enough to be in the BFSI sector itself. So I mean, I work with a wealth management company. So that gives me a lot of knowledge as to what's happening in the market. So that really sort of made me much aware with the market. Honestly, I was very intimidated with the market initially when I thought of investing, because traditionally my parents also always thought that if you have surplus money, keep it in FD. But I mean, because I'm in this industry and I've sort of gained knowledge as to there are various securities that you can invest. I obviously chose mutual fund because for me investments are currently long term, and like I said, I'm intimidated with the market, so I started with mutual funds. But while I've been investing for the last 5-6 years, I've understood that direct equity is also not that bad. So as we speak today, I'm not really investing in direct equity, but I mean, I would sort of like to take that leap of faith also of investing in direct equity.
And so there was this interesting data, I mean, I would say quite sad data. The data is there have been declining trend when it comes to, opening of demat account with respect to women. So Anmol, my question to you is, what should one do to increase the financial literacy amongst women?
First is we need to target educational courses and workshops where we can have these discussions about what exactly is mutual funds, how has your experience been. Especially discussion among peers is most helpful. Not only it guides you, it also helps you understand their previous experience as what has their been journey, and it kind of leads you. You don't have to start from step 0. You can start at step 1 because of the right guidance. So those are very important. Even for me, I started investing in mutual funds because of recommendation from my peer. They told me how it works. Especially these conversations, I feel, don't usually happen among women a lot.
Right.
Men usually will talk about, okay, we're investing in stocks, this has been the result. But in women, we have to start talking about it.
Mahima this side. So my question to you is that you manage your family portfolio as well as your portfolio. How important do you think is a woman's participation in terms of family financial decisions?
Oh, it's very, very important that women need to be a part of the decision-making process as far as finances are concerned, because we all know that women are mostly managing the day-to-day affairs of the household. And a woman who is financially literate, who has a sound relationship with money, the whole financial health of the household will really depend on that. So that becomes, somebody who's aware, she will know. But, it's not just, you don't have to be frugal only. Like housewives are told they have to be frugal, they have to save. Where do you put your savings? If your savings are lying in the locker, they're useless. So if you've saved that money, you've got a corpus, you have to invest it wisely. Be prudent with your money. Make your money earn for you. Money breeds money. We all know that. Another very important factor why women should be an important part in the decision making is because we are setting the right precedent for the future generations. Because if my child is to take a huge student loan today, the rest of her life or his life will be incurred in paying off that debt, and then for his expenses he will take on a credit card, and he will get caught in that vicious circle of borrowing and paying off, and poor thing will never be. So if you have a healthy relationship with your money, you will teach that forward, and probably we'll serve the society better.
Well, those were our retail investors, but moving on, while women retail investors might seem skeptical about the stock market, many of them are engaged in goal-based investing, whereas 44% prioritize retirement planning while 35% allocate the funds for their children's education. 39% start investing in their 20s and 41% in their 30s. My colleague Tanvi Dhote guides you through the process of mutual fund investing.
Financial independence. These two words can fulfill the dreams of so many women across the globe. And one of the easiest ways to achieve financial independence is by investing in mutual funds. This Women's Day, why not begin our journey towards financial independence? Without further ado, let's get started. Step 1. Figure out your financial goals.